What is an IRA? Well, stick around and let's find out. Today, I'm going to give you 8 key takeaways when you're looking at a Roth versus traditional IRA. Welcome to the channel. My name is Heather. This is Dollar for Dollar, where we talk about your personal finances and helping you achieve financial freedom. If you are brand new to the channel, please consider subscribing below and give this video a like if it is helpful in any way. And let's just jump right into it. So, what is an IRA? Well, an IRA actually stands for something. It means individual retirement account. And in an individual retirement account, you actually make all of the contributions. So unlike a 401k where you have the employer sponsoring this retirement account, this is all on you. So let's break down the difference between a Roth IRA and a traditional IRA so you can figure out what might be the best option for you. So number one, in a Roth IRA, you make contributions after taxes. So this is money that has already been taxed that you are now contributing to this retirement account. Whereas in a traditional IRA, you are making contributions pre-tax, meaning the money is actually coming out before it was taxed. So, number two, the difference between a Roth and a traditional. When you go and actually pull the money out in a Roth IRA, all of the money that you earn, all of the money that is taken out is all tax-free. So you actually don't pay taxes when you are taking out the money because you already paid taxes up front when you made a contribution. Now, in a traditional setting, you actually pay taxes when you are taking the money out. So any earnings that you make in this account while it's growing, any of the money that you are actually taking out of the account, regardless of when you put it in or how it got there, is all taxed. It's all taxable income. Number three, in a Roth IRA, there is a maximum income that you can earn in a year in order to contribute. So if you are single, it's $139,000, and if you are married, it's actually $206,000. With a traditional IRA, you do not have a maximum cap, so you can really earn any income you want and still be able to contribute to a traditional IRA. Number four, your contribution in a given year cannot exceed your income for that year, and that goes for both a Roth and a traditional. I know it sounds crazy and you're like, well, how else would I be able to make a contribution? But just know that it's written on the books for a reason, so probably somebody has done this before, or at least they've tried to. Number five, in a Roth IRA, there's actually no penalty for taking out the money that you have contributed. However, there is a 10% penalty on taking out money that you've earned in this account if you have taken it before the age of 59 and a half. In a traditional IRA, there's actually a penalty of 10% on both your contributions and your earnings if taken out before 59 and a half. So there's a slight difference there. In a Roth IRA, you don't get penalized if you're only touching your contribution before 59 and a half, but in a traditional, you are penalized that 10% if you are touching your contribution before 59 and a half. Number six, for a Roth IRA, there is no minimum distribution that is required, okay? This is kind of important. In a traditional IRA, there is a minimum distribution that you are required to take, and as of the new CARES Act, I believe it is now at the age of 72. So at 72, under the traditional IRA, you are required to start taking money out of the account. Number seven, when you are making contributions to your Roth IRA, you cannot deduct any of that on your taxes, okay? So you cannot claim it on your taxes. However, in a traditional IRA, the contributions you are making may be tax deductible, whether it's part of it or all of it. So you would have to talk to a tax professional to know more about that. And lastly, number eight, in a Roth and a traditional IRA, there is a maximum contribution that you can make in a given year. So in 2020, the maximum contribution is $6,000 if you are under the age of 50, but if you are 50 or over, you're actually allowed to contribute up to $7,000. And that's it. There you have it. So Roth IRA versus a traditional IRA, there are some similarities to them. Some things are the same, but there is quite a bit that is different between the two. I highly recommend that if you are serious about opening an IRA, whatever it may be, take into account this one thing, okay? If you are starting out and you're very young and you are maybe early on in your career, you're probably going to be better off opening a Roth IRA because ideally your income will increase over time, which means your tax bracket is going to go up, okay? You're going to be taxed at higher levels as you get older. The whole point of a traditional IRA is maybe for somebody who thinks that their tax bracket will be lower when they retire. Now, the one thing I will say about that is typically taxes go up. If you look at, just the time between World War II and now, taxes have gone up. Taxes have not decreased significantly in any way. So taxes tend to go up over time. So I would say you're probably going to be getting a Roth IRA, at least to start. And as you continue to build your wealth and build your portfolio, you may need to venture out into other vehicles, and then having a traditional IRA would be suitable. But I would definitely say if you're not sure where to start, suggest starting with a Roth IRA. Again, there's a cap to it. Totally fine. Most people are going to be okay with that when they look at all their savings. But if you have a 401k, for instance, this just might be a second area for you to dump more retirement to. But if you have a question, please leave it below for me in the comment section and I'll be happy to get back to you. Thank you so much for watching, and I hope to catch you on the next video.